Hi everyone, delonewolf here and welcome to EVE Talk, your weekly look at the market in EVE Online. So this is going to be the basically second EVE Talk since the launch of the Citadel. I'm guessing that the market will have had a little bit of time to absorb some of the changes, like for instance the tax changes. And the first thing that I noticed is that going by sell prices, which is what I use for the ticker below, there seems to be very little volatility here. Now, the question is going to be in the upcoming weeks, is this a consequence of the tax changes where the margins have increased, but when a good decreases in price, it's basically the buy orders that keep going down and the sellers can try to stay in the same region for a longer time, or do they eventually have to follow suit and will we see volatility come back in the sell prices as well? That is something that I'm really curious about and I'm not entirely sure. But let's move in on some details here, because of course for plex holders like myself, plex is selling for 940 million is not good news. 110, let's say 1 minute for plexes. But overall for the economy, I think that this is quite alright. This once again makes plexing your account decently affordable and doable. Buyers are at 904 million, so that is of course pretty big margin due to the tax changes. But if we go to the chart here, you can clearly see that we've gone down below 950 million. Here we are hesitating a little bit, and honestly at some point we are going to hit the bottom of this. It is possible that we still have to correct a little bit more, but at some point people are going to start to stack up their plexes again. Personally, I think that buying plexes at 940, 950 million is definitely not a bad idea considering where we've been historically. There are a few things to keep in mind though. CCP Fozzy, I think, said that in April we have sunk more ISK by mostly buying blueprints after the Citadel launch than we have created in the game. So we've had actual monetary deflation for a month due to the Citadel expansion, and this is of course going to just accentuate whatever was happening in the plex market, because there's just less ISK to go around to purchase plexes, to purchase stuff. And of course we also know since FanFest now that there's basically 3 times more stuff in New Eden than there is ISK, which could also basically turn the psychology around that, well, plexes may not be worth 1.2 billion just because there is not that much ISK around compared to all the stuff in the game. There are bound to be good investments in goods as well, compared to only seeing plex as the safe store of value. I think that psychology may have completely changed. For me personally, what are the lessons that I've learned from this? First of all, it means diversify, never put all your eggs in one basket. I did in fact make a really big move in plexes, and that has cost me a few billion by now. I'll be honest, I bought just below 1.2 billion on this upswing right here, and it was a pretty bad idea because all of these are now worth less than a billion, 200 million lost on every plex. On the other hand, it does clearly show that plexes were not infinitely going up, just like in the real world. Gold doesn't go up infinitely, houses don't go up infinitely. At some point the correction will come in. To my surprise though, after years of plexes only going up, all of a sudden we have a pretty sharp correction with the Citadel expansion, the skill injectors and all of that good stuff. It was, in my opinion, pretty hard to predict unless you correctly gauge all of these changes individually, and you did indeed come to the conclusion that this would put a lot of pressure on plex. I was surprised that it started when it did at the introduction of the skill injectors. I thought we would actually be able to keep going up towards the expansion, but I was definitely wrong on that. My personal actions now is actually I'm going to keep my plexes. I sold my 3 plexes in order to get the Astralis Blueprint Original. I have 14 left, and I'm actually going to ride this out. I do think that at some point, it could be months away, inflationary forces are going to start to pick back up and plexes are going to go back up, and we've already seen plexes above 1.2 billion, so I'm just going to ride this out. And let's say that during the winter plexes do come back in positive territory for me. What am I going to do? I'm not going to liquidate everything. That's also a bad idea. So what I'm actually slowly going to start to do, I think, is diversify the holdings. You need some ISK in the wallet in cases like this so that you can pick up good buy opportunities. You need a few plexes. I still think that you want a few plexes just for the convenience in order to be able to restart your accounts, in order to just be able to sell one at a good time and have a bit of profit, but also as a bit of a store for value. But you might want to pick up some cheap minerals, you might want to pick up some cheap Tech 2 ships. There's a lot of goods that you might want to consider, and at the moment, of course, it's high time for all the Citadel related stuff, but at some point that's going to come back as well, and then you might want to make some investments in all of that stuff as well. So yeah, the lesson that I learned from this decrease in plexes, and I'm on the bad end of this, is to diversify. Don't put all your eggs in one basket. And of course, now I think the message is patience. I don't think you want to sell all your plexes off now at 940 million. Take the 250 million ISK loss on that trade, and then try to find something else that's lucrative. That would be a panic movement, and that's definitely not something that I'm going to do. I'm going to show some patience when it comes to Plex, but of course I'm only going to maybe buy one Plex if I really don't have anything else that I would consider to be a good buy. Because, well, if you think we're hitting the bottom, then this is probably a good buy, though. Keep that in mind as well. So diversifying may also mean trying to reduce the average price of my Plexes. But this is a great lesson. This also shows that the EVE Online market is very much alive. And I'll be honest, if we go for the 1 year chart, during the upswing here towards 1.2 billion, people were panicking. Oh my god, inflation is out of control. We have to nerf incursions. We have to nerf everything. We need more sinks, etc. And now we're reducing in Plex prices. We have 1 month of actual deflation because of the introduction of all these very expensive Blueprint originals. And I'm seeing people whine about deflation and what's happening with all of those new taxes. That's just terrible, terrible for the game. But overall, this shows how alive the market is. CCP tweaked the ISK sinks a little bit with the tax changes, and well, here is the result. We actually have affordable plexes once again. You can easily play for a month, make $1 billion, and Plex your account if you want it. That's much more doable than 1.25 billion, let's be honest here. So yeah, I'm seeing all of this as a very valuable lesson, a show that the EVE Online economy is actually not dead or constantly inflating, or that CCP is not doing their job being the custodian of this sandbox economy. I think they're doing a pretty good job, although of course there have to be some people that take a bit of a loss on their current trades when something drops back, like Plex have been doing right here. Next up, the multiple pilot training certificates. Of course, very similar chart, interestingly enough, at the tail end actually jumping back up above 0.90 or 900 million. So again, a small sign that we could be close to a bottom, but I'm not going to call that one personally, because, well, knowing that there's been actual deflation in April, that could have a bit of an impact on everything. And of course, psychologically as well, we are not in the best spot when it comes to Plexes. A lot of people are still panicking, and so we might see Plexes go back in price even further than this. Keep in mind as well that summertime is coming, which usually does mean a bit of a decrease in activity in EVE Online in general. So it's dangerous, but again, if you don't put all your eggs in one basket, if you have like $1 billion really to spend, that you know you're willing to spend that, then I think Plex purchase at this point may already be a good deal as well. The body resculpt finally also going back down a little bit, just like Plexes have. It took a bit of time for that pressure to come through, but I do think at some point anything Plex related, real life money related, Aurum related, has to move a little bit in sync. And so here we go, finally a bit of a correction in the body resculpt. Then we've got the skill extractor still going down in price as well, of course. As the price of Aurum is quite reduced, so does the price of skill extractors. And these are currently being sold for 220 million. The buyers are at 215. That's a surprisingly small margin. So I think that they're actually considering the volumes here as well. right on the Aurum price, and that people are just playing that game a little bit as well. Skill injectors could be interesting, falling off a cliff. Let's see, 645 to 600 million. I was expecting either this to happen or Plexus to stop going down in price. It had to come into balance at some point. I mean, these skill injectors provide you a number of skill points. So does a Plex if you actually activate it. And we couldn't have Plexus become cheaper than skill injectors. And these being at Plexus being at like 950 million, skill injectors are now finally going down from 650 to 650 for the sellers, 582 million for the buyers. So that balance game, I think the market still needs a little bit of time to digest everything as well. But there is, I think, going to be a strong correlation between Plexus and skill injectors going forward in the future, both driven by their link through the Aurum market and the skill extractor market, but also by the fact that these two items actually provide you with skill points. So it's pretty interesting. Of course, the main story here is the Plex that are still going down. Next up, we've got minerals, 1110. Let's write that down. And let's start here with titanium. After a serious correction, also after a peak up to 6.7 ISK, we went down to 620, which is an okay average. We're now going back up, and it looks like we may actually maintain 630 as a decent average price in the last 6 months. And so the sellers are at 637, the buyers at 619. Margins seem to have closed a little bit. When it comes to sell orders here, 2 million, 1.5 million, but the buyers, look at that, 2 million, 2 million, 2 million, and billion units. I'm sorry, I misread that. Oh no, it's million units, right? No, it's billion units. Yeah. So this is billions of ISK that is being poured into titanium right here, or attempted to be poured into titanium. All of that less than 24 hours ago. So more demand than supply. I think we will be able to maintain 6.3 ISK for titanium, which I think is not that bad. I'm seeing a slight increase in volumes here as well. This could be due to all of the Citadel changes as well. I've started producing missiles. You need defenses like launchers, ECM modules, all of that take minerals, and so I think that the increased demand and the increased usage of minerals due to citadels is going to start up now as more and more Strauss citadels and the first large citadels are being deployed. Next up here we've got pyrite, also finally crawling out of the hole, managing to go back to 11 ISK, but doesn't look like the market wants to go above that. So 1095 for the sellers, 1073 for the buyers. Again, pretty sharp closing of the margin on an increased price. This is going to be really interesting to see how these margins react due to the new taxes. But we have buy orders of like sell orders of like 26 million units, whereas we have buy orders of 120 million, 365 million. So again, give the edge to demand, slightly upwards prices, but hesitating at this price point already. Next up, we've got Mexalon, sharply going up in price after correcting down below 59 million. I think that this is pretty damn interesting right here. 68 ISK for the sellers, 62.6 ISK for the buyers. So the margins stay there, but price movements do happen on both these prices, not just the sellers or the buyers. But this is of course a pretty sharp increase for Mexalon as well. Mexalon known as a bottleneck, so I do think that this gives some credence to my theory that there's actually some more demand starting to come into the mineral market due to the citadels starting to be deployed. People need fittings, they need munitions, and all of that stuff still needs to be produced. And there's actually really big margins on it. Just to give you guys an idea, I mean, I'm giving you guys one of my big money makers at the moment, but all the minerals that I sink in producing missiles for citadels, medium citadels, are tripling their value just by creating missiles. So let's say that I'm spending 15 million in minerals. The average price is calculated at 45 million for those missiles. And if you look for the right market, you could even get a bigger premium on that. So at the moment, producing citadel stuff seems to be extremely lucrative. Next up, we've got Isogen, also up in price, but not that much, surprisingly enough. Not managing to really break the trend. We're still at around 95 ISK for Isogen, so 95.33 for the sellers, 90 ISK for the buyers, so decent margins staying right here. The buyers, decent volumes, 9 million, 5 million, 2 million. The sellers, 5 million here, 1.5 million here, 1.6 there. So a bit more balanced in the Isogen market, so not as big a move, but all of them seems to have gone up in the last week or so when it comes to the high-sec minerals. Next up, we'll take a look at Noxium. After really reaching a very low bottom, a 6-month low, a 1-year low, pretty much an all-time low below 440 ISK, we are correcting back a little bit. I do think that I called this and Isogen as really interesting times to maybe stock up on these a little bit for the longer term, and I may be right on it, but keep one thing in mind. We've seen a small correction upwards like this before, and it hasn't stopped the decrease in price in Noxium in general. So increased volume, increased price back up to 480 ISK, but still 434 for the buyers, 480 for the sellers. There is still a lot of pressure on the Noxium market. Be very careful if you actually want to make investments on this. I would say, yeah, on a chart like this, going to a 6-month low here, definitely breaking 440. That was a good idea to try and stock up on some of these. A lot of people followed that idea as well due to this increased volume right here. The correction is there, but the general trend in the market, I don't think has been broken just yet for some of these. For Mexelon, sure, this is pretty clear winner because we're back up to a 6-month high point. But for Noxium, I'd be very careful there. Next up, we've got the null-sec ones. We've got Zydrine, also up in price a little bit, 1200, but managing to maintain here. So I do think that the null-sec minerals are trying to find their price range and are trying to get out of the volatility. So 1213 for the sellers, 1129 for the buyers of Zydrine, and 5 million buyers, 2 million buyers, sellers, sorry. Buyers, yeah, you've got 2 million right here, 1.9, but nothing that big. So slight edge to the sellers here, a bit of pressure on the price, but that on an upswing I think could be pretty normal, and we could finally start to see Zydrine show some stability, maybe at around 1.1 to 1.2 or something like that due to the increased supply right here. But it's interesting. I'm seeing the first signs of stability here. You can clearly see also that the bottom is up, the top seems to be down as well. So again, the first signs of increased stability. Let's take a look at Mexelon. No, not Mexelon, Megasite here. Pretty similar to Zydrine, but the increase in price a bit closer to the top. Of course, Megasite historically more expensive than Zydrine, currently going above 1250 and staying right there. But you see the same pattern. So let's see here, 1285 for the sellers, 1251 for the buyers. Margin closed quite a little bit. Not that many sellers in the last 24 hours, just one of 1.2 million units trying to sell at 1300. The buyers also very hesitant. So this market is closing a little bit in activity, in instability. You can, again, as I've said with Zydrine here, the last bottom was 1000 ISK. Now we managed to stay just below 1100 ISK, top at 1350. We're now topping out at 1250. So the first signs of decreased volatility are here. Morphite could be interesting. Very, very interesting. I said 2 weeks in a row, I think buying Morphite below 10,000 ISK was a pretty damn good idea. Looked like a good idea historically, and here we go, taking off quite substantially. So you could have probably bottomed close to 9,500 ISK. Current sellers 15,000 almost, 14,897 ISK for the sellers. The buyers have had to follow suit, 12,600. This was potentially a very good short-term trade, and even longer term. If you bought at the 6-month low point, you've done a very, very good deal. I was so focused on the citadels that I did not buy this. but this was a clear call that I made, and all parts of the diversification that you could have done, right, that I'm starting to talk about now, because that's a big lesson learned from me. If I had only, let's say, purchased half the plex that I did, I'd have had far fewer losses and a bit more risk, so that I could actually have jumped on some of these investments and still done what I've done when it comes to the citadels. So yeah, the market, a lot of the minerals markets, a lot of these are up substantially. Some of them are trying to find a new average price there, but there was a bit of money to be made in the last few weeks in these for sure. Very interesting how this is a bit of a mixed picture, but none of them seem to be crashing. So I think in general that the demand for minerals is pretty healthy. Next up, let's take a look at the impact on Tech One ships 2020. It's going to be a pretty long one because of my plex analysis, but we'll see here. The Armageddon, after dropping down in price quite substantially to 196 million at the launch of the Citadel expansion, it now bounced back a little bit, but it's already on its way back down. So sellers are at 206 million. I think people picked up every Armageddon that was for sale close to 200 million, but the buyers are at 190 million. So you can see a 15 million ISK margin. It closed a little bit from the launch, but it's obviously a pretty bigger margin, and being a battleship market, it now needs a bit of time to absorb all of that. But considering the low volumes, this is of course very vulnerable to price spikes, because the purchase or the bringing to the market, the sale of just 10-15 Armageddons can really swing the price of these ships very wildly, considering the low volumes. Next up here we've got the Caracal. After also breaking the trend a little bit, going below 11 million, we're now back above that. So the sellers are at 11.8 million, the buyers are at 11 million. Quite surprising, they've had to follow here. So I thought that maybe the margin could mean that this increase in price would only be visible on the sellers, but that's not the case. Buyers do follow the new margins pretty closely, it seems. So buyers at 11 million, sellers at almost 12 million. It's a decently large margin, but you need that with the new taxes. And so the Caracal recovering a little bit from the crash right after the Citadel expansion. Next up here we get the Dominics. Pretty similar situation. You can see that we broke the trend on the downward path here, trying to average 195 for the moment. We averaged definitely 200 to 205 million in, let's say, the 4 or 5 months before this. The question is this just a temporary dip, and are we looking at an average price of, let's say, 205 million for a Dominics, or has that lowered with 10 billion? I personally don't see any real reason for that. So the buyers are at 195, the sellers at 212 million. So it's working its way back up towards the old average here. Just a bit of a dip with the Citadel expansion, the new taxes possibly, everyone choosing their new positions. But on average, I think we'll go right back to where we started. Next up here we've got the Drake. That was actually recovering from a high point of 59 million, going down to 52 million, again breaking the averages with the lowest bottom right here in 6 months. And so we're looking at 49 million for the buyers and 54 million for the sellers. That's quite alright, actually makes the Drake pretty affordable. Volumes are actually staying decently high if you look at the averages here. So there's actually a lot of trade going on at the moment despite the higher taxes. And the Drake, the first one actually on a downtrend here. Next up we've got the Mauler, again very similar chart, a bit of a fall off here, breaking the averages but recovering a little bit at the tail end on higher volumes as well. So for the Maulers, the sellers are at 12.3 million, the buyers at 10.9 million. Yeah, the margin closing a little bit, the market starting to find its new margin place for all of these ships. Next up here we get the Myrmidon, very similar again, pretty sharp drop off, a recovery. We're back at the normal price, I would say, of around 57-55 million if you look for the averages here for the Myrmidon. So 59 million for the sellers, 51.4 million, 0.5 million for the buyers. Again, margin pretty healthy, around 10% here, so you can make some deals on that, but If you're looking to buy your Myrmidon for 55 million, you're bound to be able to do so. What I'm still noticing here is pretty high volumes. Next up here we got the Oracle. Again, it's the same pattern. The Citadel expansion seemed to have maybe sucked a lot of money out of these trades into other stuff, which resulted in a decrease in price in a lot of these ships. But by now the market has recovered. We're right back at the average of 85 million for the Oracle. Oops, that's the wrong browse here. Market data, 59 million for the sellers and still 38.22 of them being brought to the market. This is quite all right. And the buyers at 51.5 million. Quite a bit of action and competition going on in the buyers market here, taking their positions compared to the sellers. Then we've got the Raven here, another battleship, but again, very similar chart. The drop off at the Citadel expansion and the recovery back to 185 million. So this is all right. 194 for the sellers, 173 for the buyers. 20 million ISK margin here, more than 10%, pretty big. It is a battleship, of course, and so a lot of people are not purchasing these. The battleships are not really in the meta for nullsec or PvP or anything like that. Next up here we've got the Stabbers. Trying to do it, but yeah, seemingly wanting to settle at around 10.5 million, which I think if I go for the 1 year chart is the normal price range. Yeah, we actually went up a little bit after some volatility, so I actually think that this one might settle at the current price range, but again the same pattern here, dropping off below 10 million, recovering from that at the tail end. 11 million, 10.9 million, let's say, for the sellers, and just below 10 million for the buyers. You may be able to buy some cheap Stabbers at the moment. Next up here we've got the Tornado. Again, it's the same story, right? The market has had to absorb the tax changes, so we went down substantially to 68 million, clearly breaking the averages of the last 6 months, but we are recovering on that for the Tornadoes. And so here 74 million for the sellers, 66.8 million for the buyers. It's the story here of what's happening. The Typhoon, unfortunately, the biggest loser, tried to recover a little bit, but is already on his way back down. So that is because battleships are still being produced, apparently. 54th Typhoons being brought to the market at this price point. I would not have done that personally. I would have held off on trying to sell these. But yeah, they're just not that popular, these battleships, and so the Typhoon seems to be the big loser here. You can see that there are just no buyers of Typhoons, even at 152 million. Pretty big margin here as well. All 19 million on 173, more than 10%. So the battleships are having a pretty rough time. When it comes to the Vexor, though, we can once again see the same pattern here, breaking the averages on the downtrend, breaking 11.5 million, but recovering healthily to 12.5 million. So 12.5 for the sellers, 250,000 ISK, 11,250,000 ISK for the buyers. A margin of a bit over $1 million, so around just below 10%, which is pretty normal. So yeah, there you go, guys. The Tech 1 market, most of the ships recovering from the tax changes and the Citadel expansion. Next up, the Tech 2 market. Let's take a look at that. 28 minutes. We'll quickly look for trades, but I think there won't be many. So here's the Basilisk. As you can see, very stable around 200 million. I wouldn't make a move on this. And actually, I do think that with all the new production that's happening at the moment, there will be less focus on Tech 2. So maybe we'll just settle at higher averages, but I think it's going to be pretty hard to make active trades at the moment. Next up here, we've got Cerberus, also 210 to 220, but this is definitely not volatile enough to risk any trades on. Neither is the price good to say that you can buy Cerberus at this price point. Here we've got the Claw slightly going up from 18 million. So this is the one I think that looked decently interesting, but people already picked up on it. So you can see the demand here, the increased volumes, bring the price up above 20 million, which makes the Claw much less interesting to actually purchase. 19 million here. You want to see the buyers below 18 million to be sure to make some money on the trade. So very, very dangerous here. Next up, we've got the Guardian dropping in price below 130. Okay, interesting. Buyers 113 million for a Guardian. Interesting, very interesting. You can see that we're at a 6-month low here. You can see that the buy orders are very low. This could be interesting if there is some volatility in the near future for the Guardians, maybe a big fleet loss, big Gnostic battle, something like that. Then purchasing Guardians at this point could be a good idea. I say this with caveat that I think it's a bit risky at the moment in the Tech 2 market, but 113 million for Guardians on the buy order side I think is pretty damn interesting, considering these stops at 160 million, 150 million here. Yeah, this feels like an opportunity to me. Next up here we get the Hound settling at 19 million, so 18.2, a little bit too high still for the buyers. 20 million for the sellers. This increased margin I think is going to make it pretty rough for the Tech 2 market. Next up here we get the Ishtar going from 165 up to 190. So if you bought at this point, good on you. You could make some money trying to sell them for 195 at the moment, but it remains risky. But yeah, the Ishtar is in sell order territory, so if you still have some cheaply bought Ishtars on the market, you can actually try and make some profits out of that one. So interesting. Ishtar alive, Guardian seemingly alive with a potential buy opportunity. Not entirely dead, the Tech 2 market is. That's some wisdom from Yoda. Next up here we've got the Manticore starting here at 20 million, but staying well above 22 million. So I'm not seeing a buy opportunity here, neither a sell opportunity. Next up here we've got the Nemesis again dropping to 18 million, but a bit of increased volume, pushing that one straight up above 20 million, but not in any volatile way. This is just some market positions being filled, and I would say that this is too high to buy Nemesis at. You want this chart close to 18 million, so you can actually buy them below 18 million. Look at that margin as well. 20.7 for the sellers, 19.5 for the buyers, like around 5% margin. Just not enough. Pretty dangerous situation, I think. I don't want to buy Nemesis. Next up here we've got the Oneros. That's interesting again. Despite high volumes right here, dropping to 140. So the sellers are at the buyers are at 134. The sellers are at 140 to 143. Again, pretty small margin for the price of the ship. Some of these purchases could be interesting. I'm not seeing that as good as Guardian, but still in an interesting price range right here for the buyers, in my opinion. Next up, we've got the Purifier settling above 20 million. So again, not in the right place for me. Here we've got the Raptor. Again, it was trying to go down towards 20 million, but settled at probably 22.5 million. And currently sellers are at 23.5, buyers at 22.2. Again, not in the right spots to buy, not in the right spot to sell. And finally, we've got the Scimitar settling just above 140 million. So again, the bottom was 120, the top's 180, the buyers are at 136.6, sellers are at 150. So maybe you can sell if you have some of them lying around for a long time that you bought at 120. But why didn't you sell at 170? I wouldn't know. So again, the Scimitar not in the right place. So I'm personally a little bit skeptical about what these stack chains are going to do for the volatility in the Tech 2 market. But at least we still have the Ishtar proving me wrong on the upside, and we have the Guardian proving me wrong on the downside. So I do see a buy opportunity here and a sell opportunity in the Ishtar. It's going to be interesting to see what the Tech 2 market is going to do with all of these Citadel changes. I'm still going to keep an eye on it, but personally I'm seeing the potential of fewer trade opportunities in the Ishtar market. Just a big part of it, I think, is going to be that all of the added layers of goods are going to make it so that just creating these Ishtars, if you don't have access to all of the materials, is going to be very, very expensive. Creating these Tech 2 ships in general is going to be more expensive, and thus it could just take out a lot of competition and take out a lot of potential for that volatility, unless you are right in the know. And we could actually see a lot of this trade idea, a lot of the traders move, I think, down the chain a little bit, do more speculation on the base resources, just because you only have to pay the taxes once on producing or getting that good if you're doing the trades. So that's my theory behind it. We'll have to see if it works out or not for the Tech 2 market. Next up, we've got the Tech 3 market, 3420. Let's take a look at that. We'll start with the destroyers here, still going down, so I'm surprised by that. The Confessor going down below 46 million, so we've got 44 million for the sellers, 40 million for the buyers, and despite that we still have half a front page of new Confessors coming in. So that's a lot of pressure on the Confessor market. For longer term investments, this looks like a good price to jump in on this, but who knows. Again, just like we've seen Plex go up in price for years on end, we've also seen the Tech 3 market being in very dire straits for years on end as well. So it remains risky, but of course if you look at this chart and if you look at these buy orders here, for instance, it could be pretty good to make a move on these. Next up here we've got the Hecate, also under pressure, heading for 45 million, and despite that, look at that, 12, 42, 73, 63, 36, 21. Still oversupply is pretty obvious in the Hecate market as well. Next up we get the Jackdaw going to 44 million on the chart, and despite that, more than a front page, a full front page of new Jackdaws, 50, 12, 63, 54. I mean, this is just again the show of oversupply in the Tech 3 market taking over again. Finally here we've got the Zweppel, after going down towards 44 million, going up just a little bit. Does that mean that people have held off on selling? Nope. Here we go, seeing an opportunity to sell at 50 million. People are dumping 36, 40, 26, 32, 18, 13, 10, still dumping them very actively at the moment. So this increase in price will be squashed pretty quickly, I think, for the Zweppel. And yeah, definitely the tactical destroyer market is in oversupply. Do you want to take the gamble and purchase some very cheap ones like the Confessor for close to 40 million? You can probably do that, but yeah, keep in mind that the oversupply situation is happening right now, so it could go even lower. Next up for the cruisers, we've got the Legion, very similar. You can see the pressure right here, and despite that we have still have a front page, just not that big in volumes, 10.9 to 111. So it's a bit less in volumes, of course, because they are bigger ships, but a very similar chart, currently selling for 139.5 for the Legion buyers at 120 million, big margin on the downtrend here. Next up we've got the Loki, very similar here, dropping to 135. So 140 million pretty much for the sellers, 130 for the buyers, and by that we still have half a front page of new Lokis coming in. The Proteus chart doesn't look too healthy either, but bottoming out at 140, interesting, but a bit more expensive, bottoming out. And what do you see? You see 18 and 19 of them. You see bigger volumes coming in at the more expensive cruiser right away. So I'm still reading this as oversupply situation. Next up here we've got the Tengu breaking 140 million on the downside as well. 6-month low, 136 for the buyers, 148 for the sellers, and more than a front page of new Tengus coming in here, including 28. So that means that the most expensive cruiser is being produced the most, and yeah, is under pressure the most as well. In general though, the Tech 3 market is in pretty dire straits, clearly in an oversupply situation, probably due to more stability in wormhole space. That's my read on that. If you want to invest for the future, you may want to on volatility. These are bound to jump back up quite substantially, but if you want to time the exact bottom for your purchases, then it's probably still too early, considering all of the supply that is still coming in. Not good for Tech 3 producers, let's be honest. And then finally for the extra product at 38.20, we are going to touch on the structure equipment. I'm just going to take a quick look at all of this. It's a personal curiosity, of course, having deployed my first Astral Citadel here. Let's take a look at what the ECM stuff is going for here. Maybe the chart is not going to tell us much, but the buyers are at 60 million and the sellers are at 120 million. So that's basically double the price. They started at 200 million here. But there's just not a lot of supply, and this means that you've got a really huge margin, big markup on your minerals as well, yeah, if you can produce these, then that's of course pretty damn good at the moment. 120 million for the ECM modules. I think that these are going to be very popular for the mid slots. Remote sensor dampening going for 77 million, far more available. But the buyers are at 25 million, so probably costs a lot less in minerals as well. Next up here we've got the web going for, that has closed, and you can see decent availability as well. Buyers at 55 million, sellers at 70 million ISK. A web of course for missiles pretty important, so could be a very good choice as well. Stand-up target painter, buyers at 54 million, sellers at 117.8 million, more than double the price. So this is definitely a pretty good money maker right here. Then we've got the tracking disruptor, buyers at 26, sellers at 49 million. Probably not that popular on something that's not moving, so you can't dictate range in any way. So yeah, that probably doesn't make a lot of sense, I think. And then the warp scrambler could be pretty good. Buyers at 77 million, sellers at 90 million. I'm guessing that a lot of people were not willing. This was a pretty costly BPO to buy, and so I think that you're still making a lot of money producing these, but a lot of people are actually buying these as well, because it just makes a lot of sense having a point on your citadel. So that's it for the E-War. Let's maybe take a quick look at structural weapons here as well. So the AXL missile launcher going for 61 million, 55 for the buyers. That margin closing pretty good. Anti-subcap, that's more interesting though. 94 million for the buyers, 115 million for the sellers. I think you're making some pretty good money on these missile launchers. I think that people have a better time deploying medium citadels in high-sec, and then of course the anti-subcap launcher makes most sense for fitting those there. So I'm actually thinking that you're making a pretty good price on these missile launchers at the moment. So let's maybe the guided bomb launcher, for instance, is a null-sec only. 126 for the buyers, 140 million for the sellers. Okay, maybe null-sec groups are willing to spend a bit more money on their equipment here. Service modules could be interesting as well. Let's take a quick look at the cloning bay going for 500 million almost. 480 million, buyers are at 315 million. The market hub selling for 2 billion ISK. That's as much as a Strauss hull. I think this market definitely needs some time to cool down a little bit, just because of course it needs all of that PI to be produced. If we go for industry, you can see that it needs a lot of these advanced PI materials as well. That makes these very expensive at the moment, and it is why I'm not really pushing too hard on getting my L Citadel up at the moment. Stuff is just too expensive for a small group like ours here at the moment. But the cloning center is something that I may purchase in like a week or so and put that in my Strauss. Then the reprocessing plant, that margin has closed very quickly, right? 67 million for the buyers, 90 million for the sellers right here. So this is easy to produce, not too expensive on the blueprint original side, and so people are making these, probably still making money on these prices, but these are of course quite easy to obtain at the moment already. Next week I'll probably take a look at the rigs, but we've already been going for almost 45 minutes, so I'm coming to the end of this Eve talk here. Maybe I'll take a quick look at the energy neutralizers here. For the XLs, 80 million to 186 million. That's pretty big margin here. You're making some money on that. For the heavy neutralizer 1, 130 million for the buyers, 190 for the sellers. So it's a bit of a mixed picture, right? Some people, some blueprints have been bought by a lot of people, and so these are being produced quite heavily, are very available, and have to drop in price quite quickly. Other goods though are maybe in very high demand, not bought that often as a blueprint, and so these have a very big margin between the buyers and the sellers. You can dictate the price of these. You can ask almost any price to, let's say, have these heavy energy neutralizers, to have these anti-subcap missile launchers, to have some of that stuff, and that means that you're making a lot of money on producing these goods. This is a market that will need to settle, that will need to find its balance. It's also a bit risky, right? Not everyone is going to go for a large citadel or an Excel citadel. So this one is where I'm putting a lot of my energy, a lot of my analysis in personally to see where I want to position myself, what I want to produce, what I want to sell for what price, and all of that good stuff. But this is a new market, an emerging market, and that makes it very interesting. We'll see in the future how all of this works in the sandbox economy of EVE Online, but it is also taking a bit of pressure off of a lot of the other markets, because a lot of people are focusing on this at the moment, meaning a lot of competition as well. So it's just a mixed bag. It's very difficult to read this market at the moment, but we'll see in the upcoming weeks, of course, what all of these goods are doing. For now, that's it for this EVE Talk, guys. Thank you very much for watching, and I'll see you all next time.